Hello and welcome to the Cryptocurrency News channel. Now, the stock market price right now, the 3 consecutive days of stock market drop may be hampering crypto's revival. The thing is, crypto right now might be taking some cues from the stock market. I think it wants to go up at this point, but this asset market just continuously dropping either because of Russian fears or whatnot. I've really hampered it. Now, you can see we're still a little bit above our lowest point back earlier in January. The period from, I would say, January 7th to January 11th was the worst. We're still not that low. We haven't spiked that low, but the volume isn't quite as high as it was back then either. The volatility is not quite as high as it was back then. We basically been straightening out around 41,900. So it's not nearly as low as it was back then, but we've come down considerably from the neckline of 42,900 that we had around the 14th of January. And like I said, the stock market dumping for 3 days straight definitely has not helped crypto. There is a lot of uncertainty in the market. Despite Microsoft buying in, despite Walmart buying in, and despite other news, the economic uncertainty and people's essentially unsureness of the market has actually kept it from going back up. Now, I don't really know what's going to happen in the future. I do expect us to come back in February if this black swan event of Russia invading Ukraine does not actually happen. But, the stock market is kind of an indicator for the overall asset market, and it's just not very strong right now. I think if the stock market starts rising and the economic uncertainty actually plays out, I do think the crypto market will rise as well, because people are just really not willing to whip out that wallet and spend the money right now. As you can see, the lows during the lowest point, the first ass cheek right here, is still slightly lower. So if you count basically from January 7th, we're still slightly higher than that, but we did peak on around January 13th at this neckline. I was hoping that we'd actually hold 42,000, 43,000, but we've dropped to the next lowest neckline at around 41,000. Now the lower neckline below this one is maybe 500-600 points lower, so we definitely have to keep above that. We've been hanging around this mark for quite a while, going up and down, so I'm not really that afraid. Today's volume was a little bit greater than the last 2 days, so there is some significant activity. But for the last 2 or 3 days, it has been downward, unfortunately. And I do think that has to correlate with the stock market. Hopefully, like I said, it picks back up. Maybe the Fed will say they're not raising interest rates for a while, because I think that's keeping it down as well. But it may not actually be the interest rates. It might just be the geopolitical uncertainty right now. And I think it probably is. I don't really know what else would actually pump Bitcoin right now unless we get regulatory clarity, which I don't believe is actually coming soon. So really it depends on what kind of period you actually look at. If you look at it from early January, from the 6th or so, or from the 7th, we are still up. If you look at it starting from the 13th, we are actually in a down pattern. But the ass cheeks theory, it's not actually forming very well, because this first cheek is still significantly below this cheek that we're forming right now. And unless you get a really, really crumpled and demented ass cheeks formation, it just doesn't really look like this. It should have come down here and dropped to around 40,000 before coming back up right about now. But right now, it does not look like the formation is actually forming right now. And the second one, it looks like we're still on kind of a hill downward right now. But it does look like we've kind of flattened out on the hill downward. So we might be at a second trough, and hopefully we can actually go up from the second trough, because this trough isn't quite as bad as this trough right here. So what I'm hoping is for a reversal, but I think the weak stock market performance is actually putting it down. In terms of the technical analysis, on the numbers, we are still all pretty much negative. The moving averages on the exponential and the simple are all sell, but we're within 1,000 points of a buy on the 10 and within 2,000 points of a buy on the 20. So it only takes one small surge. I do think if the stock market manages to come up for 4 or 5 days straight of a couple hundred points each, I do think the crypto market will actually come up as well. In terms of the oscillators, they're still all neutral, so they're not giving you any kind of direction. But I do think right now, we just have to watch the geopolitical situation and see how the stock market turns out. Because I do think even though crypto hasn't been hit quite as hard as the stock market, it is actually reacting to the overall asset markets, the uncertainty and the supply chain issues. And because of that, we definitely might have to wait until February or March for a turnaround. Because problems aren't going to go away anytime soon, especially if we have geopolitical instability. In terms of the weekly graph, we're still pretty far away from crossing the EMA and the SMA of the 10, and and like even on the yearly, we're down on the 50. So I guess like the 50 you could kind of look at. The 100 is 2 years, so you don't really look at that. But like all the moving averages basically say sell on the weekly, and I would definitely hold back a little bit until February to actually like buy in. If I was like looking to buy or sell. On the weekly, the commodity channel index is almost oversold. The average directional index is pretty weak. So, and the RSI, the stochastic is oversold as well. So I would kind of like saying on the oscillators, it's probably not a sell. I think it's probably a buy on the weekly. But because the moving averages look kind of far off, I probably still wouldn't buy right now. On the monthly, obviously monthly is always going to be positive. All the oscillators are neutral, and since we've just been oscillating around, nothing's actually going to change. On the 10-month, we're obviously on a sell. Everything else is a buy. It would take several more months of this price action to actually put us under on the 20, and I don't think we're going to get that. I still think we're going to get like a revival kind of in March or February or March if the Black Swan event doesn't happen. Like I don't think if the Black Swan event happens. If it doesn't happen by mid-February, I don't think it's actually going to happen. And I think people will gain a little bit more confidence in the market. Plus, the inflation will slowly start to subside as we get more and more into 2022. It'll still be high, but it will be a little bit lower. So I think people will start to gain more confidence in the markets, and that will actually propel the markets back up as we get into 2022. Right now, obviously, like people are very, very weary geopolitically, and they're also very weary with the inflation, the Fed interest rates, and market-wise. So maybe for like the next couple of weeks, we'll kind of like just be treading water, but hopefully as we get into the year, it will actually come up. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.